yes, you have the ability to capture some upside on the value of the properties, but you're also, if there's any downside, you're the first dollar loss leader on that as well. So there's two types of REITs. There's equity REITs. Equity REITs own the property and they derive income from the tenants leasing the properties. And they get appreciation or depreciation in the value of their shares for that equity REIT. Mortgage REITs are different in that we're a lender secured by the property. We do not own the property directly. So when we issue a $1 million loan, that loan is going to come back at $1 million. There's no appreciation of the value of the dollars we put out. Now we're secured and protected by the 25 to 40% of equity in that property. So the difference is that an equity REIT, traditional equity REIT, yes, you have the ability to capture some upside on the value of the properties, but you're also, if there's any downside, you're the first dollar loss leader on that as well. And so what has been happening is that I think most retail investors didn't distinguish between the two. There is a very popular cannabis equity REIT that was the first to come out in 2016 on the New York Stock Exchange. There's a funny story about that, how they got up on there and nobody else did. And then there's also two other mortgage REITs, but when you read their marketing material, it just says REIT. And so I think that retail investors didn't distinguish the difference. And so those other two publicly traded mortgage REITs are trading at a premium to their par value of their share price. And on a mortgage REIT, there's no reason to trade on a premium other than the discounted cash flow to what is the yield that's coming out on the next quarterly distribution. So as opposed to a equity REIT, it might have been originally a cost basis of $100 per share, but now the value of that share is appreciated to $120 a share because the value of the portfolio went up. In a mortgage REIT, the value of the portfolio should never go up or down because it's loans out there. So big difference there between those two.